Hi friend, how you doing? Hope all is well. This is part 2 of my gold trading strategy. The part 1 of this video, I received few comments from people asking vital questions. So I decided to make another video to explain in more detail. So in this video, this very part 2 of this strategy will cover how to mark proper market structure with this strategy, valid pullback, and the entry model. These are the 3 important key parts of this strategy, and I will explain in details for you to get better understanding concerning the market about this strategy. So without wasting much time, let's start with how I mark the market structure based on this strategy. So let's begin. So let's look at the market structure. The first thing we need to do in this strategy is to check our time, whether it's in New York. If the time is in New York, then we move to 15 minutes time frame to analyze the market structure. And whenever you see price move from low to high, and from this high to low, from this low here to high, market is in uptrend. Your marking of highs and low starts from 6 o'clock p.m. New York time to 8 o'clock p.m. New York time. So let's assume you have breakout structure in 15 minutes time frame, shows you that market was in uptrend. You will look for recent highs and low within this time. From this 6 o'clock p.m. to 8 o'clock p.m. we'll be looking for recent highs and low in 15 minutes. Let's take, for instance, this is your recent low and this is your recent high. This one becomes your recent high. From this 8 o'clock p.m., after marking off your recent highs and low in 15 minutes time frame, from 8 o'clock p.m. to 10 o'clock p.m. New York time, you'll be looking for price to sweep this recent low for you to the movement because the price was in uptrend. I hope I'm making sense now. What if the market did not show you breakout structure and the market shows you liquidity sweep? What do you expect? Now pay attention. These are the 2 things you'll be looking for when you're marking off your market structure. Now let's assume that you see breakout structure. After the breakout structure, there is another low and we have another high which failed to close above this high. What do we call this? We call it liquidity sweep. From this point, market have changed character. Pay very good attention because this is where most of you get confused. From this point, market have failed to create another high, showing you the momentum have changed. What if price drop, show you something of this nature, highs and drops again before this 6 o'clock p.m. Technically, this is a breakout structure because market changed character here. How about making sense? Now, whenever you see this type of structure, market failed to close above the high he created and drop, this liquidity sweep is called change of character. In this very strategy, then it's not a must you see a valid pullback series of candle pushing back. It can be single candle, move back, take up liquidity and close. You can still call it a breakout structure. I will still take you to valid pullbacks. Whenever you see this type of structure, we are anticipating that market is in downtrend. We look for recent 15 minutes highs and low during this time from this 6 o'clock p.m. to 8 o'clock p.m. So let's take, for instance, from here to here is our recent highs and low. So this is our low and this is our high. This is low and this is our recent high. Now we wait for sweep on this high from this time period from 8 o'clock p.m. to 10 o'clock p.m. New York time. How about make sense? If we have a sweep on this high, we look for market structure shifts to continue going down, targeting those liquidities first. You understand? So that's how to do it. So if this is clear, kindly comment that I've understood how the market structure works. So I want to see a comment to know if I explain it better to you guys. So this is what we'll be looking for. Let's flip this chart, the same scenario in downtrend. So whenever price moves from high to low, from low to high, from this high to lower low, breaking off a structure, and you see another low to high, and from this high to low, and price failed to close below this low to complete the downtrend movement. It's called liquidity sweep. From this point, markets have changed character. Then, if you can be able to spot any pullback, It can be single candle, it can be series of candle before this closure of New York section. Then market have changed direction. Market is now in uptrend. Do you understand? You will mark your highs and low within this time from this 18 o'clock p.m., which is 6 o'clock p.m. to 8 o'clock p.m. in 15 minutes time frame. When you mark out your highs and low, because the market is in uptrend, you'll be waiting for sweep on this very 15 minutes low for you to continue your uptrend. When price sweep liquidity from this 8 o'clock p.m. to 10 o'clock p.m., you will look for market structure shift in the same time within this time from 8 o'clock. You look for market structure shift in 1 minute time frame for you to target those liquidities. I hope this is clear. Now I will take you to valid pullback for you to see how pullback works. And pay attention. People got confused concerning pullback. I want to tell you that whenever price take liquidity that the previous candle was taken out, whether by wick or body, the pullback is valid. You understand? So here is a valid pullback. This is a single candle. It's pushback. This is a bearish candle that closed bullish. So it's a valid pullback. We can still mark this as our highs and this is our low. So take notes. Look at it very well. And if it is series of candle, that makes it more perfect and beautiful. This is a valid pullback because price push back, take up this low and do what? And close above. So here is our high, above is our high, and this is our low. You can screenshot it if you want, but remember, whenever you see single candle taking up the previous candle out, it's called a valid pullback. And the same thing here, this is your high and this is your low. We just show you this because we mark our highs and low in this very strategy, and we also use it in entry model. So let me rush into the entry model. I won't waste much time on that. So there are two types of entry model. Whenever price will liquidity in 15 minutes time frame, we go to 1 minute time frame. The first thing I look for is order flow. Let's say for instance, market take up this high, close below, and this is called market structure shift. This is called market structure shift. This is order flow. If it is series of buying candle without any pullback, it's called order flow. I use this as my entry model. That is the primary entry model I use. Then I wait for price to come back to mitigate the zone. Then I keep targeting liquidities. But what if this very order flow is not there and it has been mitigated? I look for order block. What I showed you now, some people call it breaker block. It doesn't matter. What matters is do you notice what actually the price is doing at that particular point in time? Then if the order flow is mitigated, I look for fair value gap at the extreme or anyone, but I prefer using initial fair value gap because of missing out. If I can use order flow as my entry, I can use initial fair value. But if you want to refine more to get more risk to the reward, and if you can endure missing out the trade, you can refine more using your order block or extreme fair value gap. I hope this is clear. So now let's move into a live example for you to see everything, how it works. So guys, let's take a few examples. First thing you do, go to this time zone, change your time to New York. That's the first thing, very important. Then we go to 15 minutes time frame to analyze the market structure. What we have here is zoom in your chart. That's the first thing you do when you want to analyze the market structure. For you to see clear view, now I have a breakout structure here. Market was in uptrend. So this is a breakout structure, and we are hoping for the price to drop back again and continue going high. We have another valid pullback here. This is valid pullback because price drop back, take up liquidity, try to push up again, but it failed. This is an indication that the momentum has dropped. So it draws my attention. From this point, I'll be looking for a breakout structure. Market did not break off a structure here. It tried to hold with this week because a lot of people will still buy in this week. That's a lot of reaction here. Where do we have a breakout structure? We finally have a breakout structure here. This is a breakout structure. From this point now, I have know the direction of the market that I'm in downtrend. Up on making sense. As we are approaching, we are tending to New York close, the closure of New York time. This is closure of New York time. If you look down below, This is Sunday, 30th June 2024, the opening of this week. This is 6 o'clock p.m. So we mark it out because from that 6 o'clock p.m., we look for recent highs and low till 8 o'clock p.m., the opening of Asian section. So here is our 8 o'clock p.m. We need to mark out 10 o'clock p.m., which is the time zone we'll be finding our entry model after sweep. We find sweep from 8 o'clock p.m. to 10 o'clock p.m. So here is our 10 o'clock p.m. You see how I mark everything. Look at it very well. The structure of the market was in downtrend. After price failed to continue high, we have a breakoff structure here. Now we are in closure of New York, which is 6 o'clock p.m. We start to look for recent highs and low from that 6 o'clock p.m. to 8 o'clock p.m. Let's throw the candle to see if we have any valid highs and low before 8 o'clock p.m. the opening of Asian section. We have beautiful highs and low. Now we need to take out this 8 o'clock line for you to see how it's closed. At this point, we are marking our recent highs and low in 15 minutes. I hope I'm making sense. Here is our high. This is high, recent high, and this is recent low, the opening of Asian section at the candle. This is 15 minutes candle. So because we are in downtrend, we'll be looking for price to do what? We'll be looking for price to sweep this high. Then we find reversal indication, that is market structure shift on 1 minute time frame, and take it. Understand? And the sweep must close above the high or low. Because we're in downtrend, we're looking for closure on this high. So remember, the sweep must close, not just a weak sweep. It must close above in this very strategy. So let's throw the candle. You see what happened here? Price tried to close below, but it didn't. Let's roll the candle more, mark one candle. So we have a sweep around 21.15. That is 9:15. That's when we have sweep. You understand? So let me show you how I mark my targets. This is the only valid zone I see, the nearest zone, so I pick it out. This is my target. I will move to 1 minute time frame to find a market structure shift before 10 o'clock p.m. Moving to 1 minute time frame, you need to understand a valid pullback because everything happens so fast here. Valid pullback is very important. That's why I showed you that a week can be your valid pullback. So we are looking for market structure shift. So this is valid pullback. This zone is valid pullback. But let's see if you can still have anyone. We don't have anyone yet. So this candle serve as a pullback for us. We need to mark it out because it's very important to us. There's no any other one. We use it. Do we have, so it's MS, market structure shift. Let's mark it out, market structure shift. Do we have any fair value gap? We have tiny fair value gap here from this point. I have tiny fair value gap. If you don't want to use that, you can use this order flow, this last selling pressure before this drop. Using the order flow, this series candle, I can use it as my entry. Now let me set my target to see if the market will go to my predicted direction. We're going for shorts. So here will be my entry. This zone will be my entry. Add more pips for spread. The target is here. We are targeting the zone. This is my final targets, and if I target here, I will have around 5.44 risk to reward. It's not a bad trade. So let's see what the candle can mitigate. So we are mitigated already in with this candle. Don't panic, just follow the instruction, you will make money. Follow the instruction, you will make money. Repeat every day, every time. Come back, you will see it's happening. Every blessed day. Every blessed day. Just make sure you understand the market structure. That is very important part of it. As you're moving, you can take partial for those who are afraid of giving back their profit to the market. But for me, I don't care. I don't care because if I lose twice, I can still make it 3 times in a week. Remember, this trade gives us 5 risk to reward. So let me shift to 5 minutes time frame for you to be more faster. can see it's not magic. We start it from scratch to finish. So I'll give you more example, just one example, then I will end the video because it's now super long for anyone to watch. Okay, this is the second example. This is the end. Pay very good attention. How do I analyze this market structure? This is the first example we do. Generally, you need to pay attention to the overall trend. What is the structure of the market saying at this point in time? Market failed to close above this very high. The overall trend is in downtrend. Now we have a break of structure at this zone. We have a break of structure. I know that market is now in downtrend. This is a break of structure. Let me label it BOS. So closure of New York time is 18 o'clock p.m., which is 6 o'clock p.m. And this is our 6 o'clock p.m. Let me mark it out. This is 6 o'clock p.m. This session indicator shows us the opening of Asian session, which is 8 o'clock p.m. We mark it out. Then mark our from 8 o'clock to 10 o'clock p.m. where we stop searching for entry model. That is market structure shift. So everything is now in place. Let me remove this so that I can backtest it for proper learning. So now from 6 o'clock p.m. to 8 o'clock p.m. we'll be looking for recent highs and low in 15 minutes. There's no valid high and low now. Okay, we have new candle, which is the opening of Asian section 8 o'clock. Let's take it out to see if we have any valid low. We have a valid low. This is a valid low. This very candle here act as a valid low because take this liquidity, this candle here, it take out the liquidity sitting with this candle. So it's a valid low. We need to mark it as our low, and here becomes our high. You see the importance of pullback I show you guys. So here is the recent high we have for the day as Asian section opens, and here is the valid low. Hope this is clear. Now we roll the candle to see if we have sweep. We need a closure of a candle above because the market structure was in downtrend. We need a close above, not below, because we are in downtrend. Beautiful. You see how everything works? We have a close now above this high, this 15 minutes high. Remember, look at the market structure very well. This is the last example. Generally, market failed to close above this high. This shows that market have changed character. Then we have a break of structure here. This is a break of structure. This shows us that market was in downtrend. We mark out the time we look for recent 15 minutes highs and low, which is from 6 o'clock p.m. to 8 o'clock p.m. And we have one here. From this point, from this 8 o'clock to 10 o'clock p.m., we are looking for sweep. We have a sweep with this very candle here. Candle must close above because we're in downtrend, looking for sweep on the high of the recent 15 minutes to 1 minute time frame to find a market structure shift. We're looking for market structure. See what happened? This happens out of timing. It happens out of timing, though it can be a good trade, but I just want to show you that once it's out from this time zone, there's no trade for me. But I just want to use this to teach you what you're supposed to know concerning this strategy. So this is order flow, the last selling pressure before this change of character. This is a valid pullback, but it happened out of our time we use for this strategy. So some people will take the risk, but don't try this. Please don't try. We're going for short because we have a market structure shift. So let's accommodate spread here. Where's my overall target? Let me move to 15 minutes time frame to see the recent place market will be sick for a rebound. This zone is a portal zone, this very zone. So we are targeting this zone. So this gives us 7.37 risk to reward. Using 5 minutes to roll the candle, let's see what will happen. Remember to give room to spread. So let's play. Let's see how everything happens. There's no room for panic. Whenever you're taking this strategy, the only thing that will give you confidence is I'm going for high risk to reward. Even if I'm out today, tomorrow I will still make huge profit. You see how the price drop like rain. So that's it, guys. I've made everything possible for you to become a profitable trader trading gold without panic. Just go there. Remember to backtest every day. Keep in note what makes you to lose the trade for the day. Train your eye to spot valid pullback. I say, trust me, before this year ends, your life will change. So remember to subscribe. Remember to share with your friend who are still struggling. Don't forget to ask your question. I'm always available to help. Peace. Good luck.